1/7/2013. S&P 500. S&P 500 was flat today. The Dow, well, it was down as much as about 80 points intraday. But it still ended up negative because we had those big moves from the fiscal cliff. But I just want people to know that we're up here toward the 5.5 year high. And this is the daily bar up here. Now I'm going to blow this up so people can see it, so that the rest of the traders, all of you, will understand that this is where, you all know that this is where we had shorted this back in calendar 2012, and we're right back up here. We haven't broke through there yet, but we've gone over the analysis enough with you. We're just updating. The S&P was flat to sideways. There's a 2 daily breakout to the top of that resistance channel. One of the things that we'll be looking at as far as support goes, the support level will be half of this daily bar right here on the S&P, and slightly up a little bit. So it'll be right about there. And that's about 1440 area. One thing about this breakout at this resistance level is that you would come back down here to about 1425 and test the support level going forward through the earnings season. And if this breakout was to be real and we were going to get up to the 1495 area, you'd have to back in, fill that, test these moving averages, then come back up in a high frequency buy model and break these highs, calendar 2012 highs. That's the S&P update. Now, as far as the Dow goes, we can clearly see here, and I'm going to take out, these were some of the trend lines that I had done before. This is that wall of resistances. This is where they broke down over here. I'll take those out of here and just draw right here for people. Now, it's underperformed. It has not gotten back up to the double top high at 13.6 and some change. But once again, when the first part of the calendar, first 2013 week, we went up 2 days. That was volatility. We had put the bottoms in over here from the big short in the Dow. The fiscal cliff, the government came out with a resolution. Now they got to deal with the debt ceiling. This is going to be the half bar support roughly right there in the Dow. That's going to be 13,264. But once again, you would come back down in here and you would test on the Dow right around 3,100 if you were going to make the higher highs. And if we break this resistances, there's going to be a wall of resistances right up here, 13,522. That's the Dow. Now, as far as the Nasdaq 100 goes, which is related to the Nasdaq Composite, once again, 2-day breakouts. Calendar year of January starts out like this, and we would have to come back down in here and test lower to break the higher highs. These Nasdaq 100 was way up here in 2012. 921, this is one of the best breakouts in calendar 2012, and the Nasdaq 100 is the 100 stocks that are in the Nasdaq Composite right here, the top 100. All your good stocks that are weighted just like an S&P. So Nasdaq 100 is very important to watch. It hit that resistance, it's reversed, it's come back down, but it's still sideways on lighter volume. Now, as far as the Nasdaq Composite goes today, we understand the same thing, that it kind of mirrors the Nasdaq 100. It's the Nasdaq 100 leadership stocks that run the Nasdaq Composite to the highs, but it also has the same reversal. Nonetheless, this is how the year is starting out. However, it was all based on volatility. We got earnings season starting with Alcoa tomorrow. There's going to be the upper resistance right here. Then, of course, we have one right there. Now, what we're going to be watching in the earnings season that starts tomorrow, and it's going to be pretty heavy this month and going into February, is when these companies do miss, is how when they do get punished, we will be looking for the buying opportunities. That's as far as the earnings season goes. I'm going to conclude today's market wrap that it was a sideways inside day with a reversal and resistance is holding. They're pulling back, and we're going to see how these indexes trade and if they can break. If the S&P can break a 5.5 year high. It's close. 1474 and some change was where we sold that S&P short before, and we're slightly 13 handles below it. So these are the technical short term for our market commentary on today's trading on 1/7 of 2013.